Hey everyone, Coach Investor back to another video for today. So shares of Alibaba have been soaring over 8% on Friday. Now I'm going to explain to you why the shares were soaring and you're going to think this doesn't make any sense. Well, that's basically the story of holding shares of Alibaba. I'm sure most of the viewers here can agree. And so, Chinese regulators on Friday fined Ant Group almost $1 billion, lifting shares of Alibaba over 8%, which owns a third of the fintech company. Now, the penalty brings short-term pain, but hints at a brighter future for the whole Chinese tech sector. So yes, the reason why Alibaba shares are soaring is because a company where they own a third of got fined $1 billion. Makes sense, right? There's obviously more to the story. So regulators said part of the fine included confiscation of illegal income based on a statement published in Chinese and translated with software by barons. Authorities allege, among other things, that Ant broke rules when conducting banking, insurance, payment, and settlement business in the past, and had issues with corporate governance and anti-money laundering obligations. Of course, if you don't remember, a couple of years ago, Ant was about to go public. The CCP basically stopped that, stopped Jack Ma, cracked down on the whole tech sector there in China. You know the story. Now they say here that the Ant penalty from a regulator should pave the way for the group to move forward and possibly even go public. But here's the thing. Apparently, companies can't list domestically on the country's so-called A-share market if they have had a change in control in the past 3 years, or in the past 2 years if listing on Shanghai Star Market, which is geared toward new technology companies. For the Hong Kong Stock Exchange, this waiting period is 1 year. Now, why is this important? Because, well, Jack Ma gave up his controlling rights of Ant earlier this year, complicating the prospects of an IPO anytime soon. Now, we have some comments from some analysts, from some people more familiar with the matter, and they are explaining why the market is actually a bit more positive today. So the market likes it because scrutiny looks likely to be over and the fine, though big in absolute terms, is very manageable for such a big company. An 8 billion won fine would be less than the estimated 9.6 billion won profit that Ant generated in the December quarter. And here we have actually some numbers. So Ant fetched a valuation of $280 billion pre-IPO. The myriad regulation imposed over the past 2+ years means it's now worth a fraction of that, as it's now more fin than tech, with some already giving it a valuation of only $22 to $57 billion. Now, Ant also said in January that it has no plans for an IPO now and it is focusing on its business. Still, the company's chairman Eric Jing said in 2021 that it would eventually go public. Well, we know this won't happen for another at least 3 years. Now, if you're enjoying this type of video so far, leave it a thumbs up, subscribe if you have not, would really appreciate that. We're trying to reach 30,000 subscribers by the end of the year. So hit that subscribe button, it's free, so why not? And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Now, with regards to more positive news with regards to Alibaba, of course, we already talked about the spin-off and how that could be beneficial for shareholders. Of course, right now, I still don't know how that dividend payout will work from that spin-off from those IPOs. I don't know how that would work. Hopefully, we're going to get more information later on this year. Now, one last thing here with regards to an analyst at Jefferies. So he basically said the decision addresses market concerns about fintech and the overall internet sector. They said it removes the overhang on Alibaba's shares. We've had the Twitter overhang for Tesla, and now this basically removes the overhang for Alibaba shares, but also I think for other Chinese companies such as JD and maybe even Tencent. Now, with regards to Alibaba breaking up, Bloomberg made this visually much better than I could. So breaking up of Alibaba, the major restructuring announced in March 2023 that promises to yield several initial public offerings. So the fiscal year 2022 revenue is $132.5 billion. So when you spin this off into 6 business units, which was one, digital media and entertainment, which was $5 billion, international commerce, which is AliExpress, Lazada, and some others, $9.5 billion. Then you have local consumer services, $6.8 billion. Cloud intelligence, which should be big, $11.6 billion there. The logistics, China, $7.2 billion. And then the largest part here is $92.4 billion. China commerce, which major investments include Taobao and Tmall. Now, of course, currently it's a waiting game on what will happen with those businesses, how will they perform independently, etc., etc. So currently, if you're a shareholder, what you can expect or what you're probably expecting right now is maybe a reacceleration of growth when it comes to revenue and better margins when it comes to profitability as well. Currently, analysts estimate that in fiscal year 2024, they estimate EPS to grow 5%, fiscal year 25, very nice acceleration there, 11.4%, and then fiscal year 2026, 11.7%. Now, if you look at sales for fiscal year 2024, 3.37%, but I think that number now is probably closer to the 5%. Fiscal year 25, reacceleration 9.2, and then 26, 9.14. And if you missed last quarter's earnings, this is basically the major overview there. Yes, growth is not that exceptional, right? Only 2% overall. But if you look at adjusted EBITDA and adjusted EBITDA margin, you can see that year over year, things have become much better. So overall, shares are up over 8%. Why is that? Ant Group received a fine of $1 billion. The major overhang over Alibaba and maybe other big companies in China might be dying down. Remains to be seen if that's the case, but overall that's the story right now. So that will be it for this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.